We have three very qualified members of the panel to talk on these themes. I'm going to first start off by introducing Huub Cornelissen from FMO. Huub is Director of the Energy Department with FMO, the Dutch Development Funding Agency. He previously chaired its credit committee and headed the IT department. Before joining FMO in 1990, he worked for UNIDO, the United Nations Industrial Development Organization, in Zaire and Indonesia, and he taught industrial development to graduate students at the University of Eindhoven. And he is a graduate in industrial engineering from the University of Eindhoven. I'm just going to ask Huub to make a few introductory remarks.
Thank you very much, Peter. Just one small correction. We don't call ourselves an agency, but we are a bank. So we are a development bank from the Netherlands, a bilateral development bank who has been in this business for over 45 years and also very active in this region. FMO focuses on three sectors, mainly financial sector, agribusiness and energy. And I'm sharing the energy, I'm heading the energy department. Our balance sheet is roughly $9 billion US, of which 20% of these assets are in energy assets that can be loans or equity or anything in between. And about 600 million we have invested in Asia, in different countries in Asia. And we come back on that. We can come back on that later. Our strategy for the next 6-7 years is to double our impact and halve our footprint, which means that we will heavily focus on renewable energy in the future. We are doing that already, but it will be even more heavily focused towards renewable than it was in the past. Because about 2/3 of our assets in energy are renewable now, and by 2020 it will be almost 100%. And there's also the challenge, I think, here in Asia, because like somebody said this morning, Asia is going to roast this planet if they don't do anything about it. And it's really, I think it's from an outside position, it's a bit disappointing to see how much has been invested in renewable energy in Asia so far. So there's a big challenge there, and we are also there to cope with this challenge and to help investors make this happen. I think that's about where I would like to leave it now.
Sembcorp, as you may be aware, is a company listed on the Singapore Stock Exchange with Temasek as his largest shareholder. I look after the utilities business and responsible for the growth of that business within the ASEAN region, as well as in China and in Australia. Sembcorp has fairly large ambitions within the utility space. We are looking to try and grow our business rapidly. To date, the utilities business is about half of the profit contribution for the group. And I think in the near future, it will be the majority contributor to the group. So in terms of the countries of focus for us within the ASEAN region, we are active in development efforts in China, in Vietnam, in Indonesia, Philippines, as well as in Myanmar. So all of those markets are fairly active and it's got fairly high demand potential. So we are focusing our efforts in those regions to see if we could grow our business within the backyard, if you like, of Sembcorp.
Thank you. And our third panelist is William Su, who's currently managing partner of Sustainergy Capital Limited. That's a Hong Kong-based merchant bank founded to invest in and develop natural resources projects in emerging and frontier markets in Central and Southeast Asia. William has over 12 years of investing and advising in natural resource projects and has developed and financed over $750 million worth of projects worldwide. He is a graduate from George Washington University, and he has an EMBA from Kellogg School of Management and Hong Kong University of Science and Technology. William.
Thanks. So Sustainergy Capital Limited is an investment platform that we built almost 3 years ago, focused on two regions, Central Asia and Southeast Asia. Our thesis was these are two very natural resource-rich regions, but very infrastructure-poor areas. So our focus for these regions are really 5 major industries. It's energy, and under energy we do a lot of clean technology, so solar, wind, hydro, oil and gas, both upstream at the E&P level and then downstream at the storage level, and then metals and mining, water and waste. We're actively investing into operating assets in these regions, as well as we have a smaller development platform where we're looking to work with local partners to co-develop projects across the region. Currently, we have an investment in Thailand for solar. We have a run-of-river hydro portfolio in Laos. We're very active in the Philippines. We've got a copper concession. We're very active at looking at solar, wind in the Philippines as well. And we're very keen on trying to do more across the region. I think our biggest challenge that we face is we see a lot of projects that have come to fruition, but there's often issues with these projects. The return profile is not right. The risk profile is too great. Country risk is high. It doesn't meet the returns that we need. So we started a smaller development platform to actively try to get involved earlier, to work with local sponsors, local developers, to meet some of these challenges, to bring some institutional knowledge, able to reduce the risk profile, get the returns to where we needed them to be.
As far as this discussion goes, this is a discussion for the audience, so very much want to invite every one of you here to ask questions. Having said that, is there anyone now who wishes to ask a question before we start? Well, in that case, I will perhaps start off the discussion by asking each of the panel to give their views on where you see as the best opportunities in the Asian region. I know that William's focus is very much on emerging and frontier markets. I know that Kian has got a lot of experience in Indonesia, and I know that Huub has emphasized his interest in renewable projects. So can I perhaps just, each of you, just for a minute or so, just to set out what you see as the best opportunities in the region, and then while you're doing that, perhaps the audience can think if there's anything they want to follow up, either on that topic or on any other topic.
As Peter was saying, we are focused on emerging and frontier markets in the region. We find that Thailand, Philippines, we think are the greatest potential for what we're looking at. And part of that's driven because of the local partnerships that we have in those countries. We also like Laos, Cambodia, and to a lesser extent Myanmar as well. I think our focus and the attractability of these markets is really driven by our ability to build partnerships, relationships with local sponsors. We feel that having these partnerships really helps us de-risk these projects. By bringing in these local partners, it allows us to more quickly get up the learning curve, understand the local challenges, as well as be able to produce projects that hit the return profile that we need. So we like those countries, but we feel the region as a whole is a very exciting place to be investing in and developing now.
I would join you there, certainly from the equity perspective, to go to Thailand and Philippines, where we see also quite some opportunities, certainly if it is on the renewable side. If we talk about that, I would maybe go to India, Because what we are looking for is countries where you have a regulatory system who supports foreign investment. Also, you need credible off-takers, which are not there in every place, and also in India. In some states you have credible off-takers, in other states you don't. So you have to be selective there. And next to that, I think we have to look for good sponsors. We remain a bank by the end of the day, and we want to have return on our investment too. That's to say, these, I think, are the main markets where I see the biggest opportunities. But on the other hand, we as a development bank, we don't shy away from more riskier countries like Pakistan, Nepal, Laos. If there are good opportunities there with good sponsors, we would certainly be interested to look at that. But it's not easy. Even in India or Philippines, regulatory systems are not perfect. So you need to work around and to have good sponsors and good local partners to make it happen.
I think William's covered all the markets that are interesting. I think Indonesia remains one of the largest markets in terms of potential development in the power sector, at least, given its large population and a largely under-serviced population. So I think that's a market in which there's plenty of opportunities to play. Thailand, I think it's a very mature market, and it's very difficult to seek an entry into the Thai market unless you partner with an existing player and unless you've got a strategy to try and grow into some significant scale within that country. Philippines, I think it's a market which is very interesting at this point in time. It's if you like, an investment-grade country, but with power prices higher than Japan. So I think the question that will be asked about Philippines is how sustainable is the tariff structure within that country, and how long will that last for before something breaks. And if that happens, then what next? It's a country where it's got some significant energy challenges, given that it's got no natural resources, and all of its energy resources will have to be imported. So I think Philippines, it's one where I think renewables will have a significant part to play in the energy mix of that country. In terms of more frontier markets, Sembcorp will be looking at markets such as Myanmar, where the potential, I think, is very large, given that they've got a population about 60 million, but a dependable capacity of about 2,000 megawatts. So if you can just imagine the potential scale that you can grow if you get in on the ground floor, if you like, of the development within Myanmar, I think there is a lot of potential there.
Thanks. Can I actually follow up on something I think every one of you have said, is you've emphasized the importance of working with local partners. Obviously, we all know the importance of local partners, but it also raises quite a number of challenges. Can I ask each of you in turn, perhaps starting with William, firstly to say, what do you see as the major challenges you face when working with local partners? And secondly, what are the mistakes that, in your experience, local partners make and you have to effectively correct when you partner with them in a project?
That's an excellent question, and I'll try to answer that in a short period of time. We find when you work with local partners, local sponsors, really the biggest challenge is how do you align interests when you're bringing new money into a deal? We're usually coming in where there's some maturity around the project, so there's visibility around an offtake, there's visibility around permitting, there's visibility around technology, so we're not coming in greenfield. So some work has been done by the local partner already. So how do you align their interests with your interest, where you're bringing money in? We don't want them to step out of the project completely. We want to align the interests so that we get this project to the finish line, that you're actually able to construct a power plant, start generating electricity and revenue for the investors. So the biggest challenge for us is how do you tie our interests with the local partner's interests? Luckily, we've been able to find some structures that, that allow for this, but in many cases, for example, in Thailand, where we see some other investors being more aggressive and just buying PPAs outright, we haven't felt as comfortable doing that. So the alignment of interest, keeping that local partner tied to the success of the project, we find the most challenging in these situations. As far as critical mistakes that local developers, local sponsors make, we find it's really driven off some of the project level assumptions, that the return profile doesn't meet the risk associated with that project. Sometimes that can be due to they're making mistakes assuming that the EPC cost for a solar project is under $2 in certain countries. They're making mistakes in regards to fuel costs, these kind of things. In other cases, the documentation around the project isn't all in order. So for example, the permitting, the land, the titling, the entitlements isn't there. And so in some of these countries, it's hard to get comfortable that the land ownership is actually in place and is all there for an investment grade type of project. So those, I think in our mind, those are really the big mistakes that local developers, local sponsors make, which are issues with ownership, permitting, those kind of things on the land side, and then just making incorrect assumptions on cost or revenue generation of projects.
I think you made an excellent summary of the risks which are there. For us, it's even more important because we are not based here in the region to have local partners. So we rely very much on local partners. And how we do that, sometimes we invest in private equity funds who are our local eyes and ears on the ground, which is very important for us. And I think, yeah, there are sometimes issues with local partners, but on the other hand, they know the country and the people very well. So in that respect, it's also an asset for the project. But you have to find the good alignment between the different partners.
I think the presence of a local partner within a project is usually a huge plus. The differences, I think, arise simply because there is a difference of perception in terms of risk. A local partner will assume all of the what a foreign investor would call sovereign and regulatory risk, which to a local investor he would assume that there are none simply because they live, work, operate within that environment and therefore are very comfortable within that system. A foreign investor coming in cold will like to build in returns to compensate for the risk, whether they're perceived or real. And I think the misalignment of those perceptions, I think, creates stress within the partnership. But I think if you've got a sophisticated foreign investor coming in, those should be discussed openly and in due course, create an alignment of views in terms of what is the appropriate level of risk and therefore the commensurate returns that one should expect from a project.
Thanks. Two of you mentioned Myanmar as one of the countries where you saw opportunities. In terms of this issue of local partners, can anyone comment on the availability and quality and some of the issues involved in finding partners in Myanmar?
The first thing you need to find out about your partner is to make sure they're not on any blacklist in Myanmar. It is a difficult thing for a country that is just opening up. Certainly, with its recent history, there are a lot of interests within Myanmar that would have connections with the previous regime, and therefore will find themselves listed within some list held by either the European governments or the US governments. So I think as the country opens up and as foreign investment flows into that country, the key to the success of any large infrastructure project would be some form of international financing. And as you would expect, all of the international financiers, whether they are the multilaterals, the IFCs, the ADBs, or the commercial banks, will have issues around the legitimacy of local partners. So I think local partners that pass the critical examination of all of the institutions, I think are difficult to find. But once you find them, I think they are potentially very, very powerful in terms of advancing your interest in a project within that country. So in short, they are in very short supply in Myanmar. And if you find one, I would suggest you hold on to them.
I think Kian makes an excellent point. I mean, we're very active in Myanmar. We haven't made an investment there, but we're trading into the country on a commodity basis. And there's a bit of chicken and egg situation there where the strong players, as you trace the flow or source of their funds to the source, it's either through the opium trade, the jade, ruby, sapphire trade, and it tends to be intertwined with the military at some point. So unfortunately, almost all of the strong local partners are on some list or another person's list. So finding the legitimacy around them is very challenging. And so it's been difficult for us to get comfortable with that. But I think over time, as the country continues to reform, build in regulatory frameworks for FDI, we'll see more opportunities. But it certainly is a huge chicken and egg situation where there's huge need, there's huge infrastructure gaps, but finding strong local partners that will stand up to FCPA and other types of regulatory frameworks that institutional investors will require are not there yet, I think even for the multilaterals. But I think over time, you'll start to see that very quickly.
Yeah, I think I cannot add very much here. We are going to make our first step into Myanmar probably in the financial sector, and then look at other sectors like also the energy sector. There's a huge need for it, but you say the legitimacy issue is there. KYC is very important for us, and I think certainly there's a role for our type of banks, certainly the multilaterals, they have to break the ground, and we will follow very quickly.
One of the issues all investors face is balancing risk and return. Obviously, we're all chasing for superior returns. At the same time, we need to moderate our risk, and obviously, regulatory risk and political risk. Therefore, we're looking for a stable regulatory environment. In your decision-making in Sembcorp, how do you balance those two things, the search for high returns against the requirements for stability?
I have those fights constantly with my finance department. Fundamentally, when people sit in the back room doing theoretical calculations as what is the appropriate risk-return framework for a country compared to someone who's out there understanding the market and understanding the market perception as to risk within a particular country, there is a huge difference between what is expected in the head office and what is available in the market. But I think at the end of the day, the market always prevails. You can always want very high returns, right? I don't think I've got any risk management people within my company here, so I can say whatever I want. But I think there is a lot of theory behind, cost of equity, country risk premium, project risk premium, and everything else. But those are highly theoretical and highly defensible frameworks. But I think there is a need to temper those views with what is actually being done on the ground in a country. I think you can take take Indonesia as an example, and you've seen the returns on projects in that country, being bid down from the high teens to now very, very low teens, right? And soon, I think, you potentially could see those coming down to single-digit returns if people start getting aggressive in trying to seek growth within the market. I think we all, out here in this market, and trying to find good projects is getting harder and harder. Even though we see potential pipelines that are very, very large, trying to realize individual projects is actually quite a hard thing to do, and therefore, I think people continually sharpen their pencils in terms of their return expectations. There is also I think if you like, a disconnect between what, if you like, the head office requirements of we want a stable regime, we want a stable regulatory framework, we want stable rule of law. I think if you want all of that, then you've got to go to developed markets and expect developed market returns. If you are expecting superior returns, if you like, I think then you've got to temper your expectations of what sort of risk you're willing to take on, right? If you try and make sure that there are no risk available or no risk that is not mitigated to a large extent, then I think you should be down to the lower end of the return scale rather than the high end of return scale. So it depends on what appetite you want and what risk you are willing to take and how much you are willing to put your balance sheet on the line to try and grow your business within all these regions.
Before we conclude, then, I just want to give each panel member just 1 minute just to make a closing remark. I would like to invite Huub to say something about renewable energy, because I know it's one of the things that FMO has a particular interest in. So do you just want to just finally conclude on anything you want to say about that and FMO's interest?
Yeah, I think I would like to challenge the audience to go back home and think over what you have heard today and this morning and maybe also tomorrow. I think there's an urgent need to do something about climate change and to mitigate climate change. And the challenge is there for you in Asia to make that happen and to make investments in renewable energy in these countries. And I think there are plenty of people who are willing to finance you. There's a lot of interest for finance renewable energy assets in Asia. So come up with your ideas and discuss them, and we will make them happen.
Thank you. Kian Min, what's Sembcorp going to do for renewable energy?
Sembcorp has got a soft target of trying to grow its renewable energy targets to about 10% of its generation. So we are constantly on the lookout for renewable energy projects. We're very active in wind space in China. I'm looking to see if we could do solar projects, hydro projects within the countries that we are interested in. So there is obviously a recognition at senior levels within the company, at board level, that we need to balance our development, with some level of renewable energy. I think the challenge for renewable energy in the developing markets is the issue of subsidies. I think for Sembcorp, I think we would only try and do renewable projects if there is grid parity in terms of its prices. We prefer not to rely on a subsidy regime to make a renewable project work, notwithstanding some very attractive financing terms that Huub will be providing for all of our projects going into the future. But we've seen the withdrawal of subsidy regimes in Europe when economies take a downturn. So it's certainly a very large risk that the Sembcorp will probably think very hard before committing to.
William, your company's called Sustainergy, so obviously it's central to your focus. How many megawatts are you going to build of renewable energy over the next 5 years?
We don't have a target in that regard, but as far as our focus and our priority, as far as capital allocation from our capital, our hope is to do 60 to 70% of our funds into renewable energy projects. We think as an asset class, solar in particular is very, very attractive. We like the footprint, we like the return profile, we like the risk profile. And as both these gentlemen said, we feel and we look to do more clean tech across this region. There's a huge need for more generation. We think clean technology should and has to be a huge part of that. So as Huub was saying, we certainly feel and would challenge each and every one of you guys to try to do more clean technology in each of your countries. The need is there. The opportunity we think is there as well. Most of these countries, if you take away the government subsidies for electricity, solar, wind, hydro is as competitive in almost all of the countries in Southeast Asia. So we find these markets attractive. The risk-return profile, sometimes gets there, sometimes doesn't, but we feel the market's moving in a direction that, at least from our perspective, we'll be focusing a large part of our resources and capital on solar clean technologies.